Hello, everybody. This is Federation of Global Merchants, and I'm going to do an article here. So, um, do one article. This is related to the oil prices. I don't know about you guys, but I like to trade oil and oil contracts and oil futures and options and stuff. So, just going to read it here. This is actually from today. It says oil rally faces tidal wave of supply. So it says the oil market's 2-year bull run is running into one of the biggest tests in months, facing the tidal wave of supply and growing worries about economic weakness snapping demand worldwide. After topping out at more than $75 per barrel and or more than 75 and $85 per barrel just a month ago, both the U.S. crude and Brent benchmark futures have grappled with near-relentless selling. For a time, prices had support and on hopes that renewed U.S. sanctions on Iran would force barrels off the market. That changed in the last week. The world's three largest producers, Russia, Saudi Arabia, and United States, all indicated that they were pumping at a record or near record levels, while the United States said it would allow waivers that would allow buyers to keep importing Iranian oil, lessen the threat of a supply crunch. Those factors, along with a spite of the recent weak economic reports out of China and other emerging markets, has shifted the conversation back towards worries about oversupply and pushed U.S. futures to lows not seen since April and interrupting an upward move that would consequently found support during the rally's minus pullbacks. The structure of the U.S. crude future markets curve curve had several months indicated expectations of a tighter supply, but the future dated contracts now suggest investors might think markets could be awash in oil over the coming months. The magnitude of recent selling is strong suggested that global oil demand is weaker than expected as a result of tariff issues, especially between the United States and China, said Jim Richenbush, president of Richenbush and Associates. There has been exodus among speculators as well in the last 2 months. Net bullish bets on oil have decided to be the lowest level in over a year. Selling notably accelerated on Thursday after the West Texas intermediate crude futures fell below 65 dollars a barrel, a level that has stood firm on previous sell-offs during the summer and fall. The oil market ran higher in anticipation of this week's formal implosion of sanctions against Iran and the U.S. on the concerns that the supply from producers like Saudi Arabia would not be able to make up the difference. However, the U.S. government said on Friday it would temporarily allow several countries, including South Korea and Turkey, to keep importing Iranian oil when the U.S. sanctions come back into force on Monday, sparring them for now from a new threat of U.S. economic penalties. Still, some analysts believe the current sell-off has come too far too quickly. Major OPEC producers will not be able to add more supply should it come necessary, particularly with production in Iran, Venezuela, and Libya still at risk. At a loss of 1 million, that's a BPB from Iran. I think that's barrels per something. But anyway, from Iran further indicates in Venezuela coupled together with geopolitical disruption in Libya and Nigeria could easily wipe out what little spare capacity we have left, Bernstein analysis said this week. All right. So, output from the Organization of Petroleum OPEC, led by Saudi Arabia, rose to levels not seen in 2 years. U.S. production hit a record of 11.3 million barrels a day in August, and Russian output rose to 11.4 barrels per day, a post-Soviet era peak. For U.S. crude, a key area to watch between the $64.45 and $64.80, where prices have been found support in the past, said Fard Razaziki, analysis at futures brokerage at forex.com. If oil dips below this point, the path of the least resistance would be to the downside, he said, for the Brent. And that is UK oil, that Rezakuzi, I can't pronounce his name, but it's watching the range between $69.50 and $69.60 a barrel. And if it were to slip below that, we could see a much larger correction, he said. Yeah, I think he's right. We're probably going to see a much larger correction on the downside as far as oil prices go. So be on the lookout for that. Of course, I could be wrong, but judging by this article, if these countries are increasing their supply of oil, which they say they are, then yeah, we could be looking at a decrease in the oil prices this week, actually, because this article is from today, but we'll see. So it's definitely going to trigger some selling, some additional selling. Also, you got to remember that oil prices also affect other currencies. Affects our currency, USD. It affects the current Canadian dollar, and Great Britain, the Japanese yen as well. This is probably going to decrease in oil price. Probably going to lead to an increase in the Great Britain pound and in the Japanese yen, because they have to, they have to import oil, so it'll be a lot cheaper. So probably looking forward to that. All right, thumbs down, thumbs up this video if you want to, and subscribe to our channel. I'm going to be doing another video here pretty soon, actually, and, regarding this little booklet, 7 Secret Keys to Prosperity and Abundance. And this is from, if you guys can read it, it's published by the School of Metaphysics in the Missouri, or whatever you want to call it. So I'm just going to be reading over it, and yeah. So I'm going to do a video series on this book. I read through it, and it's pretty informative. So be on the lookout for that. So what I'm going to do is I guess the next video that I'm going to post is I'm just going to post. I'm just going to read off the 7 keys that are in this book, and then I'm going to go into it in more detail in other books or in other videos. So yeah. So stay tuned for that. Be sure to subscribe to our channel. Thank you.